This video will be explaining how aarnâ AI filters market volatility into opportunity. So we have volatility has always been both the curse and blessing of DeFi markets. For some, it's a source of stress watching assets swing wildly in minutes. For others, it's the lifeblood of alpha generation. The difference lies in how well you can separate noise from signal. That is where aarnâ AI-powered vaults come in, designed not to fear volatility, but to thrive on it. 1. Volatility, risk or opportunity. In traditional finance, volatility is usually seen as a risk factor. In DeFi, it's magnified. Prices shift faster, liquidity pools drain overnight, and narratives flip in hours. But hidden inside that chaos are patterns, microsignals that reveal when assets are oversold, when liquidity is mispriced, and when entry points are optimal. Most traders miss them. aarnâ AI doesn't. 2. Filtering out the noise. Crypto markets generate massive data streams: on-chain transactions, liquidity flows, order books, staking activity, governance signals, and even cross-chain movement. For a human, that's overwhelming. aarnâ AI is built to parse these streams in real time, filtering out speculative chatter and focusing on actionable signals. Instead of chasing narratives, it identifies where capital is truly flowing and where it's about to move next. 3. Adaptive rebalancing. What makes aarnâ vaults unique is not just recognizing opportunities, but acting on them. Through adaptive rebalancing, the AI adjusts portfolio weights dynamically, accumulates assets during fear-driven sell-offs, harvests gains during unsustainable pumps, rotates capital toward undervalued pools before demand spikes. This means volatility isn't something to hedge against, it becomes fuel for yield generation. 4. Beating human bias. Even the best traders fall prey to bias, fear of loss, overconfidence, or FOMO. AI, on the other hand, has no emotions. It doesn't panic sell at the bottom. It doesn't overstay a rally. It doesn't hope a position recovers. Instead, aarnâ system executes purely based on probability and expected value, giving it a decisive edge in turbulent markets. 5. Compounding the edge. The outcome of filtering noise into signal is not just protection, it's growth. By systematically reallocating during volatility, aarnâ vaults generate compounding APYs. While traditional vaults may stagnate when markets chop sideways, aarnâ thrives, turning short-term swings into long-term returns. 6. The future of DeFi strategies. Market cycles aren't going away. In fact, as liquidity deepens and narratives shift faster, volatility may intensify. Protocols that rely on static strategies will struggle. Protocols that adapt like aarnâ will define the next generation of DeFi asset management. DeFi isn't just about yield, it's about surviving and thriving in an environment where chaos is the norm. aarnâ Vault's AI doesn't just follow trends, it detects mispricings and opportunities invisible to human eyes, reallocating capital faster than traditional strategies could dream of. In a market where being early is everything, the Vault doesn't just compete with humans, it leaves them behind. Inside the machine, the future of DeFi asset management is already running.